Hello, tubers! Good morning, good afternoon, good evening, wherever you are, and welcome back to Coopersthaiadventures. This segment, Money Matters. Well, today we're going to discuss the big news in ETFs, Bitcoin ETFs. Were approved this week, and that's been a long time coming. What's the big news about this? There was 11 of 13 applications for the spot Bitcoin ETFs approved, and what they're allowing the average normal working day person to purchase Bitcoin through a government regulated, audited ETF. And the ones approved, obviously, were the big boys: BlackRock, ARK Investments, Grayscale, Fidelity. So that was terrific news this week. And however, there was some, I think, monkey business going on, and I'll get into that. Okay, so what actually happened? Well, it was the largest opening day for any ETF in ETF history, with the spot Bitcoin ETFs opening $1.2 billion flowing into these ETF funds. It's kind of interesting. Day one, the price went up. Day two, there was only 2 days open, Thursday and Friday last week. Day two, price went down, which to me was a little odd, but some people say, hey, you buy on the rumor and sell on the news, and they're claiming that's what happened. But I did a little research into that, and I'm not so sure. But anyways, the big volume day was with Grayscale. They were the ones that actually won the court case, forcing the hand of the SEC to approve these, in my opinion. Of the rest of them, BlackRock, which we would think is was second place, and then Fidelity, and then ARK Investments. And I think going forward, you're probably going to have three big ones be the lion's share of the ETF business, and I think those will be the three. I'm not counting Grayscale, and let me tell you why. Grayscale is the highest fee, 1.5%. And boy, people were gravitating away from that on the opening days, the opening 2 days, because of those fees. The rest of them either have no fees, such as BlackRock for 1 year, or 0.2. So, I mean, they're very minor compared to Grayscale. And so that's, I think, why they were gravitating away from Grayscale. Most of Grayscale's volume, when you look into it, was selling pressure. So in my opinion, that had a bit of downward effect on the price. How could it? There's always a buyer for a seller. Why would I say that? Well, it turns out that this was the first chance for Grayscale owners to redeem their shares for actual Bitcoin. Prior to that, it was a trust and they couldn't do it. But with the approval of these spot Bitcoin ETFs, now some of the shareholders, the big ones, were able to redeem shares for the actual Bitcoin. And they've pretty well proven that that's what happened. A lot of Bitcoin hit the market because of that. And consequently, when you have more supply, demand stays the same, price goes down a bit. And I think that was one of the reasons the price backed off of Bitcoin. Nothing outlandish, mind you, but just, didn't rocket like we thought maybe, or some of us. Now, going forward, there's something I think is disturbing. And that is that Vanguard, they're behind BlackRock, probably the next biggest. Charles Schwab and Bank of America are not allowing their customers to purchase anything to do with Bitcoin. They can't buy into these ETFs through those platforms. They're not recommending them. They were having nothing to do with them. And they claim that it's not suitable for their customers. Well, you do a little research and you find out the best performing asset over the last 10 and even 15 years consecutively was Bitcoin. And so they're telling their customers, we're not allowing you to participate in the best performing asset over the last 10 or 15 years. To me, guys, they're shooting themselves in the foot. If you do business with any of those companies, you might want to make a call to see, hey, why is this, and how do I get into it if I choose with my money to invest in it, and see what their answer is. I'd be, I think they can say what they want, and maybe it's 6 months, maybe it's 2 years, but I'm positive you'll see them actually revert that stance and get into it at some point when they realize everyone else is and they're winning from it. So anyways, that was interesting, so I thought I'd give you a heads up on that. The other interesting thing I found, I had assumed when I put my money into one of these ETFs, or you do, that Bitcoin is purchased immediately on an exchange. And it turns out it's not. And that's very, to me, I didn't know that. But it's similar to any other asset you purchase in an ETF. They don't settle until closing time at the end of the day. So at 4 o'clock, which when markets close, they put all the money in the pot that came in, and that's what they've got to go buy Bitcoin with. Well, okay, that made sense. I guess they got to, they don't buy it at every 2 minutes on the thing. They wait to the end of the day to see how much they need to go and get, because they have to equate the money in with Bitcoin. Okay, so that's got to definitely. But it turns out they can do up to 2 days to purchase this. So you figure over the weekend, and then the markets are closed this Monday for holiday. What have they got? 3 days to decide? The price goes down. They're going to buy and make even more. But I don't know. It seemed odd. Where with Bitcoin, it's instantaneous exchange. So hard to tell. But anyways, that's it. So day one up, day two down. When you analyze and look into it, which I did over the weekend here, the reasons I came up with why Bitcoin did drop somewhat was obviously Grayscale with their big redemptions. I think that was a big one. And they cut their fees, by the way, from 2% annually down to 1.5%. And they're trying to claim that this is, great, because we're established and all this. I think they're shooting themselves in the foot, because look at what happened. The redemptions are gone. Now, I think they're also thinking, well, a lot of people have made a lot of money with these. They don't want the tax problem. They'll probably stay with us. And Grayscale can keep milking the 1.5% from them. But boy, I'll tell you, if you can switch that, I would do it. I don't own it, which is good. But the fees are way too high with them when you can get 0 for a year with like BlackRock and several of the others. The second one, and this was interesting, FTX, went bankrupt, that exchange, a year, 2 years ago, and they had the bankruptcy trustee has control of a bunch of Bitcoin that will be liquidated for the creditors, to pay the creditors, and many consumers are part of that creditor. So they would be looking for the first opportunity for sizable volume. And apparently that's what also hit the exchanges. And anytime you put more supply on an exchange, with demand staying the same, the price should go down a bit. And I think that had a second reason why the prices didn't take off. They were, softened because of that. And the third one, believe it or not, now this third one's speculation, but the government does hold a sizable amount of Bitcoin that they have seized from, disreputable parties over the years. There was, speculation they also were on the market dumping. And again, to bring the price down. So anyways, that probably, in my opinion, gave the reasons why the price didn't necessarily skyrocket, which not that it would. And in a way, it's good that it didn't. Slow and steady wins the race. Now, what's this all mean going forward? Well, there is 900 Bitcoin produced per day by the miners, the Bitcoin miners. That's it. 900 Bitcoin per day. We all know there's a limited supply, a little over 19 million in existence. Most of that is not been moved and won't be moved. There's only about 1.8 million coins on the exchanges. So in the first 2 days, there was 23,000 Bitcoin purchased for the ETFs. Will that continue? In my opinion, it absolutely will. In fact, I think it could get even higher because as more and more people learn about Bitcoin, the advisors are going to be marketing it. You're going to see ads coming out from all these ETFs now. All their employees are going to be pushing it onto their their clients, at least a percentage, anywhere from 0.5% of your portfolio to maybe 5%, depending. You'll see the volume of interest and purchases of the ETF consistently go up. Now, when you've got a production of 900 coins a day and a demand of 23,000, boy, oh boy, it isn't going to take, 2, 3, 4 months to kind of wipe out the 1.8 million coins on the exchanges. Well, then what? Well, then the price probably is going to have to really go up to get some of those cold wallets to let go of some of the coins. So interesting times we live in, but that's what I see happening going forward. By the way, sure, Grayscale had the biggest volume, but we kind of know that was from the redemptions. The next biggest was BlackRock. IBTC is their ticker symbol, and they had about 25% of the total Bitcoins purchased, in the market the last 2 days. So they're going to be a winner. Fidelity also was was behind them, a little further back, and then third place was ARK Investments. That's Kathy Woods, and yeah, she's been in it a long time, knows what she's doing. So either one of those three, they're all similar in fees, around either 0 to 0.2, with the grace period anywhere from 6 months to a year. The first year free, say. So yeah, they'd be ones that I personally will be looking into. Definitely won't be looking into Grayscale, not at 1.5%. But and then finally, the news was for the week. I spoke in prior blogs about the Bitcoin proxies, and that was a way for, prior to these ETFs, for the normal person to at least participate somewhat in Bitcoin. And the ones I mentioned were MicroStrategy and, Bitcoin miners, the miners which do the mining. Well, first off, MicroStrategy, and they all dropped. They're kind of levered plays, so they dropped more than Bitcoin did. But typically they'll go up a little higher when Bitcoin goes too. So they are levered. Now, MicroStrategy, a lot of their price depression, I call it, was from people switching, from MicroStrategy into the actual Bitcoin ETFs. And there's multiple reasons. People feel safer. They're still participating, obviously. They just prefer to maybe be in the actual ETF than MicroStrategy. But I think what's happened because of that, where, maybe in the past for certain periods of time, a week or two or a month, MicroStrategy maybe was overvalued compared to Bitcoin. I think it's substantially undervalued now compared to Bitcoin. Heavens, the amount of Bitcoin they own simply on their balance sheet is basically worth as much or more than the shares outstanding. Not counting the debt, because that's worth zero, in my opinion. But so that's something I'm not too concerned about. I do own MicroStrategy, and I'm going to continue to own it. And I'll be dollar cost averaging into these, by the way, which I do recommend. The other benefit of MicroStrategy, they don't have any fees. So that's why I'm keeping it. They have no fees. Lastly, they're able to hedge. So, if Saylor and his board see that hey, there's a beneficial way to acquire more Bitcoin, which he's done in the past, borrowing money at 0%, borrowing money at 1%. Heavens, that's a no-brainer. They have the ability to hedge to purchase more Bitcoin for for their stash, their hodl. So that's a good thing. I have that ability, and they're sharp boys. They've proven that to me, so I don't have an issue with that. And finally, for me, I'm able to lever that to my advantage through selling call options upside. So, you know, if the stock's at $700 a share, I might go out to $1,400 a share 3 months out. The worst that happens is I double my money. In the meantime, I do collect a premium. So anyways, yeah, that's called, you know, selling calls against your stock, which I own. And yeah, anyways. As to the miners, finally, to wrap up, they took a heck of a beating. I think they're way undervalued as well. I've been slowly picking them up, dollar cost averaging, and I'll continue to do that. The why? Well, the miners that I look at are debt-free, and they also, you know, are the largest. And they also all have a good position of holding Bitcoin. So I think they got three things in their benefit, and they'll be here for the long run. The miners will always be here. Even when the halving comes and the amount of Bitcoin drops from 900 a day produced to 450, and that's happening this coming April, there'll still be miners having to produce that, wanting to produce that, and the big will be around for that. So I think they're somewhat undervalued now, and I'll be hanging on to them for similar reasons to MicroStrategy. Again, they're able to lever their positions to grow bigger. Obviously, they issue shares quite often, but then they're buying miners with that to, get their scales going. The ones I look at improve their hodl position. In other words, they're growing their coin stash constantly. And lastly, I can sell calls for some income going forward, waiting for the big price jump. Okay, well, so anyways, that's about it for today. That was interesting time in Bitcoin. I think in years ahead, we'll look back as this was one of the watershed moments in in markets, meaning obviously Bitcoin. So anyways, without further ado, thanks for watching. If you found this helpful, please hit the like and subscribe. It really helps out the channel. And stay tuned for Cooper's live streams going forward and his other videos. So until next time, stay safe.